Hi, everyone. Thank you for joining us for Preparing for Your Purchase, where you will learn tips that will save you time, headaches, and money by learning what to expect when purchasing a home. My name is Rebecca Marple, and I'm the Customer Experience Manager at Smart Money Hawaii. We are a mortgage broker servicing all islands in the state of Hawaii since 2007. And here to present today is William Rodriguez, who is the Vice President of Operations at the company. William has been in the mortgage industry for a very long time and specializes in VA, FHA, USDA, and conventional loans. Will is a native of Colombia and speaks fluent Spanish for those Spanish speakers out there. And before joining the mortgage industry, he proudly served in the U.S. Marine Corps and was stationed at USMC Kaneohe Bay. He holds a bachelor's in economics, a master's in organizational management, and is a certified veteran lending specialist with the National Association of Mortgage Brokers, where he was just named as one of the veteran loan originator, top veteran loan originators in the country. So, without further ado, William, thanks for sharing your expertise with us today.
Aloha, everyone. Wow, that sounds way better. Well, thank you guys for joining us today. As Becky mentioned, this is our basically our class or our way to help you prepare for your purchase. There's a lot of questions, there's a lot of myths about it, and so we just want to share some of those tips with you guys. And let's go ahead and let me see if I can share my screen with you guys. Just bear with me, technology and I sometimes don't get along here. All right, let's give this a shot. All right, can everyone see this slide where it says prepare for your purchase?
Yep, I can see it.
Perfect. All right. Okay, so let's go over what we're going to be talking about today. We're going to be talking about the benefits to buying, obviously, to being a homeowner, myths about purchasing, which there seems to be quite a bit, and requirements to buy, along with your team, which is super important for your purchase transaction. And just one last bit of information, which is, time equals money, and we'll go over that. Okay. All right. As Becky mentioned, we're Smart Money. We've been around since 2007. We are a locally owned and operated mortgage broker, which means that we have access to more than one lender, as everyone's situation is different. You don't just fit one particular box. You fit, one client could fit a particular box here. Maybe they don't qualify for this particular lender. We can go with a different lender. That's what makes us brokers more versatile, and we can quickly pivot. If your loan doesn't work out with one lender, we can quickly go to the next. Um, so the difference between us and the banks is essentially we have access to more than one bank. So if I am I bank with a local bank and I go ask for a loan, if I don't fit their criteria, their credit score requirements, the debt to income ratio requirements, the down payment requirements, that is it for that particular lender because they deal with just one set of guidelines, one set of interest rates. With us, we have access to many different banks, many different guidelines. And so, as I mentioned, some banks have lower requirements than others. And that's what we do best here. We take your situation and we pair you up with the bank that's going to get you the best loan for your particular situation. All right, so let's go into our first topic, which is benefits to buying. Right? What's the reason why? What's the point of buying here? It
Um,
looks
so
like
um,
we have
Before
a
we start, Will, I just wanted to do a really quick poll for all of our attendees today. And so, on average, how much do you think a property's value will increase per year? So we have, let me just start the poll. We have 0 to 4%,
oh,
5% to 10%, 11% to 20%, or 20% or higher. Will, don't put the answer.
sorry.
Okay, so
Go
all
ahead.
of you, if you could please vote, and I just want to see real quick what you guys think, and I'll give you all about 20 seconds or so to get
Gotcha.
those answers in.
Got it. And just to be clear, it's what were the categories from 0 to what percent?
Um, well, they can see it, so it says 0 to 4, 5 to 10, 11 to 20, or 20 or higher.
Gotcha.
And so it looks like we have some answers coming in. We have Actually, guesses across the board. So I'll go ahead and end the poll. And Will, you can take it away for what the correct answer was.
All right, and my apologies, I got ahead of myself before. So in Hawaii, we have amongst the highest equity gain year over year. Recently, of course, you have to take into consideration we just came off of some wonderful years during the pandemic where the prices just skyrocketed and it was as high as 20% equity gain per year. But typical appreciation is anywhere between a 5 to 10% year over year. So what this means is you're not just buying a property. When you buy a property, when you're buying a home, this is another vehicle to create generational wealth, right? You're buying what's called an appreciating asset. The difference between buying a $250,000 condo or a $250,000 Lamborghini is that Lamborghini is going to be worth less the minute you drive it off the lot versus a property will continue to go up in value, especially here in Hawaii. We live in Iraq. We can't make any more land, and so the demand is always going to be high, especially with our military personnel changing posts every 3 to 4 years. We have that constant influx of people coming in, buying and selling as well. Again, this is buying a property is another way to create wealth. This is something that you can pass down to your kids and your kids' kids. If you figure, most of the millionaires are typically landlords, right? They have a lot of properties in their portfolio. That's how they get rich. Okay, so what's the difference between renting versus owning? Because of course that's the biggest question, right? I'm comfortable where I'm at. I'm renting my property. Maybe my rent might be lower than if I were to buy a property. So let's talk about what the difference is between renting and owning. So let's go over the renting side, right? So on the rental side, you guys know that the rent doesn't stay the same over time unless you know the landlord, but that's often not the case, right? Rents typically go 3 to 5% every year, or anytime you do the renegotiation again, right? The other part about renting is that, I guess, security, if you will. The seller, or not the seller, the landlord may sell the property, so it's not guaranteed that you will always have that particular property. Of course, renting a property means you're renting somebody else's property. In some instances, you can't make the changes that you like, the colors that you want to paint the walls. You want to have a particular type of flooring or ceiling or windows. You're limited because this is not your property. This is somebody else's property. And of course, I'm a pet owner myself. There are places where they don't allow to, they don't rent if you have pets. So that tends to be kind of a downer for me, particularly. Now let's go to the owning side, right? So if you own a property with the fixed rate, your principal and interest payments will remain the same for the next 30 years. There are 30-year loans, there are 20-year loans, there are 10-year loans. Whichever term you get, it's going to be fixed for that term if you choose to go with a fixed term loan. What that means versus the rental is that initially rent may be lower and maybe the mortgage payment would be a slightly higher, but over time the rent will continue to go up versus your mortgage payment will always remain the same, right? Now, owning, as we talked about on the last slide, is an excellent long-term investment. This is a piece of land that serves two purposes. It's going to house you and your family, and it's also going to be growing in equity. Equity is the difference between what you paid for the property versus what the property is worth, right? That gap in between is called equity. As the market or as the time goes by, the equity continues to grow and the balance of your mortgage is going down. So that gap keeps on getting bigger and bigger year over year. Now, a lot of people start off with a small property. Once they get comfortable, maybe their family grows, maybe it's just a single person, maybe they get married, or maybe it's a couple and maybe they have kids. Essentially, when your life changes, so does your housing needs, right? And so if you start off with a small property, right, later down the line, you can actually move out and then turn that particular property into a rental. Well, guess what? Somebody else, much as some of you current renters, will be paying rent, and essentially they're paying your mortgage for you. So it's basically somebody else is bringing down your principal, and your property continues to build equity over time. Again, this is what we're talking about, just basically gaining money by doing nothing other than owning a property here. And of course, the possibility of it becoming a rental property, where eventually your rental will continue to go up because, of course, year over year, you're going to have to charge a little bit more, of course, for the same property, depending on your contracts and whatnot. And of course, the other idea too is that anything that you do to that property, any rental property, when it's time to do your taxes, you get to write off, any fixing that you do to the property, any interest on the property, property taxes, homeowners insurance. If there's HOA, you get to write it off. Of course, be sure to talk to your CPA. This is a CPA specific question, but that's one of the great benefits of owning a property. Okay. All right. So, oh, and by the way, I'll go ahead and hold off the questions until the end so we can answer them then. All right, let's talk about myths about purchasing, right? Myth number one, I need 20% down payment. Now, this used to be the case a long time ago. The reality is that you don't need 20% down payment, okay? There are different types of loans that will require less than 10% down payment. For example, if you are a member of the military, whether you're active duty or you served in the military, you qualify for a VA loan. Of course, you still have to talk to your loan officer, make sure there's some qualification requirements, but the VA loan allows you to do 100% financing. You don't have to come to the table with any down payment. Now, if you're not in the military, but let's just say that you don't have the down payment, you can still qualify for a USDA loan. A USDA loan is the second best loan, in my opinion, especially here in Hawaii. The USDA loan allows you to do 100% financing. There's a small mortgage insurance per month. Of course, talk to the loan officer. There are three things that the USDA will cap you on: amount of income based on your household, area. They only allow USDA loans in rural areas. And after the class, I can send you guys a link to that allows you to search the typical or the different properties to find out whether or not they're qualified for USDA lending. And so that's for the 100% financing. And then what was the third one? So we're talking about area, we're talking about income, and your payment cannot exceed 33% of your gross income. Okay. Once again, talk to your loan officer about the specifics, but those two loans, the VA and the USDA, are the best loans, of course, because you don't have to come to the table with the down payment. The next best loan after that would be the FHA loan. That's also a federally insured loan, and it requires a 3.5% down payment. They're all excellent ways of getting into a property with a minimum down payment. Now, if the FHA, USDA, and VA do not fit what you're trying to do, the next best deal would be a conventional loan. If you're a first-time home buyer, you only are required to come to the table with a minimum of 3% down payment. If you have 3% down payment, and of course, as long as the credit and everything fits into the model, you will qualify for a first-time home buyer program. And of course, there are different programs that fit within that, depending on the lender and depending on your credit, income, and so forth. So again, the 20% down payment, it's great if you have it, but is not required, especially if you're a first-time home buyer. And of course, there are other loans, 3%, 5%, 10, 15. Obviously, the more of a down payment, the lower the loan amount, the lower the payment, but again, is not necessarily required. And in some instances, it might be better to just do a smaller down payment and keep the rest of it for, beautification of the place. Let's just say that you're buying a slightly older property. You want to do some repairs to the home, put new floors, put new kitchen, new appliances. That's a better utilization of your money than the down payment you will see payment wise. Of course, talk to your loan officer about all those different options. All right. Myth.
Before we start again, I just wanted to do another quick poll. So this one is going to be, what is the lowest credit score I can have to qualify for a home?
Oh, wow.
So 4 options are 580, 620, 700, or 740. So go ahead. I'll give you guys about another 20 seconds or so to cast your votes, and we'll see what the answer is shortly.
Is there an option for that?
Like we got a lot of 620s. Yep. And again, looks like it's votes across the board. So I'll go ahead and end the poll. And Will, what's the answer on that one?
I don't know. Just kidding. So the reality is that whenever you do, especially a government insured loan, like a VA or an FHA, the minimum FICO requirement is a 580. Now, of course, the lower the FICO, the more requirements a lender is going to have. But the main idea behind this is that you don't necessarily need to have an 800 credit score, 760. You can still get financing because bad things happen to good people. Perhaps you don't have enough credit history. Perhaps something happened in your life that led you to have late payments on your credit cards, or repo of a vehicle or anything like that. Again, things happen in life. And so the fact that you're not an excellent credit doesn't mean that you don't qualify or that you would miss out on an opportunity to become a homeowner. Okay. Now, of course, the higher the credit, the better the loan is going to be. And this is another thing that we encourage you to talk to the loan officer about, the possibilities of improving your credit. We have a handout available to improve your credit score, which we can share with you. And of course, there's the good side of, the benefits of the good credit. Obviously, better chances of getting a lower interest rate. The better the credit score, the less risk the loan will be to the lender, and in return, they'll give you a better or cheaper interest rate. You're more likely to qualify for a higher loan amount. And of course, it's a lot easier to get an approval. The higher the credit score, obviously, the lower the risk, which means the underwriter will do a little bit. It might be a little bit easier for them to approve the loan than it is for somebody with a lower FICO score. But again, do not be deceived. The 580 and higher, it's the minimum requirement. And I have seen a lot of clients become homeowners that thought because of their, lower 600 credit scores, they had already shut themselves out of the market. And in reality, you still can qualify. So allow us to help you with that decision versus you making that decision for yourself. Okay. All right. So myth number 3: if I buy, I'll be tied down and I can't move. that's that's a good myth. So if I buy a property now, I'm basically married to this property, and that's it. I'll never be able to move. Okay. So as I explained earlier, you don't necessarily have to buy the last home that you're going to be living in. Your life changes, situation changes. Perhaps you're single, you buy a studio or single or a one-bedroom condo. Once you find a partner, then perhaps you'll need a little bit more room. Maybe you have a family, maybe you have an extended family that's moving in with you, and those things can and will happen oftentimes. And so perhaps the first home that you buy, you could use it as a stepping stone, right? I'm going to share with you guys my personal experience. When I got out of the military, I was able to purchase a property. At the time, I was not in the industry, and I was extremely afraid of this whole being, tied down to a property. I came to Hawaii from Connecticut. I got stationed here with the Marines back in 1999/2000, and I never thought that I was going to stay here for much longer. So what's the point of buying something if I'm not going to be here forever? Is what I thought initially. Here I am 22 plus years later, and I don't think I'm ever going to move out of here. But I utilized that property, and yes, it wasn't a single family, it was a small condo. And at the time I thought I was crazy to buy a condo for that price. 18 plus years later, it was because of that particular condo that I was able to later on refinance. I was able to pull some of that equity out to help me pay for some of my student loans, some of my bills. When the rates went down, I was able to refinance and subsequently take out a little bit more cash, which allowed me to buy the next property. On the next property, same idea, waited a little bit longer. I was able to do that, and perhaps later down the line, utilize some of the equity to buy the next property, and so on and so forth, while still maintaining all of these properties. Because once I moved out of this property, that became a rental, and once I moved out of this property, this became a rental. And so now these folks, the renters, are now paying for my mortgage on these properties while I continue to do the same thing, right? Of course, this doesn't have to be the case for you guys, but it's an idea that you can utilize your first home as a stepping stone, And again, it's the wealth generation. It's real. It's a scary thing. I know, being a first time home buyer, but the upside is a lot more than the downside to it. Okay. Again, just as I explained, you can utilize the equity later down the line to pull out some of that to be able to buy a bigger home and still maintain the property that you're moving out and the property that you're buying. And, of course, the idea is that you rent the property. Whenever you move out of the property, you keep it and you rent it out. Or very simply, you can sell it. And if there is an equity gain, then that's money in your pocket. All right. Myth number 4, I have to pay the realtor or loan originator out of pocket. Too bad we don't have a poll for this one, but this myth, right? I don't feel like buying a property because I don't have the money to pay a realtor or to pay the loan officer that's going to help me. Well, the reality is that the seller of the property, whichever property you end up buying, that seller is already paying for their realtor to list the property, and they pay for the realtor that's going to help you negotiate this property. So it is important that you get a realtor. Not getting a realtor will not save you any money at all. It's important that you pair yourself up with a good realtor, because that's the person that's going to help you negotiate a good price for the property, and they get paid by somebody else. So it's not something that you have to worry about. As far as paying the loan originator, we get paid directly by the bank. Whichever bank we end up taking your loan to, that's the bank that's going to pay our company. So that's not something that you have to worry about paying on any particular transaction. Let's see over here. Oh, there it is. I think I'm a little bit behind here. My apologies, guys. Here. All right. So again, the loan officer is paid by the bank. And of course, the typical closing costs that are attached to any particular purchase transaction are typically out of pocket, but these are things that your realtor can help you negotiate. Perhaps I've seen it before where the sellers are willing to credit some money so that you don't have to pay for out of pocket expense. Okay. All right. So now here is a big question. What is required to buy? All right. Well, most loans will require you to be fully or gainfully employed, hopefully for the past 2 years or more. It doesn't have to be on the same industry, but typically you would want to be, in similar industries. It's not required, but similar industries would definitely make it easier for the underwriting. Okay. If you're self-employed, they definitely require a 2-year self-employment history, right? If you're receiving income like pension, disability, social security, alimony, foster care, there are specific rules to those. You don't have to be receiving it for 2 years. We just have to show proof of it and that it will continue, okay, for at least 3 years or more after the loan is closed. The next thing that you need, of course, you need the income, because that's what's going to show the lender how you are able to, well, pay back the loan that you're getting from them for the next 30 or so years. The next thing is the down payment. Again, we talked about the loans that don't have a down payment. The VA and the USDA loans, those two don't have a down payment. But for the ones that require the down payment, they want to see where the down payment is coming from. Now, if it's coming from your side, if this is your money, they're going to want to see a 2-month bank account where the money has been sitting in there. It could be, perhaps money that's coming that you've been saving, for the past few years. It could be, maybe you had some stocks and you cashed them and now you have the money for that. Maybe you had a property before, again, in our scenario where maybe I bought a property, maybe I sold it, and from that sell, I have the money to buy the next one. The only thing, and believe it or not, this is the crazy part. I'm from Colombia, as Becky. In Colombia, in South America, cash is king. In our industry, in the mortgage industry, cash is no longer king. It doesn't mean anything. The hard part about it is, if you have cash, if you have that money under your mattress or at home in a safe, my recommendation is that if you're going to buy within the next 3 months or so, you need to put it into a bank account. Unfortunately, you're not able to say, hey, I'm going to go ahead and take the money to the escrow company the day of, because cash, they cannot receive cash because it's not traceable. Okay. Unfortunately, the easiest way to launder money is through real estate, and our industry has made us sort of, we're the tip of the spear when it comes down to finding out where the money's coming from. There's the anti-money laundering initiative that they have, where we have to basically ask you for the last 2 months worth of your bank statements. And anytime we see a large deposit, it's not that we're trying to get into your business, but we have to find out where it's from. So again, if you're trying to buy a property and you know that you're going to buy a property in the next 2 to 3 months, I would recommend you deposit the money as soon as possible and have at least the money sit in an account for at least 2 months. So that way you're not having to worry about whether or not the lender is going to take that money. If I have a bank statement and it says beginning balance, $100, ending balance $50,000, and there's a deposit for 49,000 and change, that money the lender will automatically say we can use it if it's a cash deposit. So again, that's why we have it in bold letters there, all caps, no cash. Now, let's say that I don't have the down payment, but my family wants me to become a homeowner. They can actually gift me the down payment, whether I'm doing a 3%, a 5%, 10, 15, or whatever. It could be a combination of some of my money and some of the money that's coming from my family. So the most important thing about the gift is, number one, uh, do not have your parents or your family members send you the money directly to your account. That's a big, I don't want to say a no-no, but that'll complicate things further. The best thing to do is to find out, yes, my uncle, my mom, my brother or sister, whoever is gifting me X amount of money, then simply talk to your loan officer, get what's called a gift letter. The gift letter is going to have who's gifting you the money, how much money they're gifting you, that obviously they don't expect to get paid back for this, their name, their point of contact, signature for you, signature for the gifter. And then the one thing that you want to do is you want to have them gift you that money at the end of the transaction, and you want to have them send it directly to the escrow company. Okay. And the reason why is because if they send you the money and the money goes to your account, then simply by looking at the bank statement, we're going to see, oh, here's a deposit of X amount of money, and it came from, your uncle. Guess what, uncle, you're going to have to show me your bank statement. And if we see a bunch of deposits in your uncle's bank statement, we're going to have to find out where they came from. So again, to keep things a lot cleaner and easier for you, it's better to just find out. Yes, talk to your loan officer and say, hey, yes, I'm going to be getting a gift of, $10,000, $20,000, $30,000 from my mom. The loan officer will talk to you, get the gift letter, and then at the end of the transaction, just have mom wire the money directly to the escrow company. So that way it's a lot cleaner. We don't have to find out what's on her account and whether or not she has had a lot of deposits. Okay. All right. So the next thing in getting prepared for a purchase is getting a pre-approval from a credible institution. Okay. So now here in Hawaii, I would recommend sticking to a local company. And the reason why is you want to be working with somebody that's on your time frame. Unfortunately, some of the banks are, East Coast or West Coast, and there's going to be a time difference. And a lot of times, things can go well, and you may not have any hiccup whatsoever. But when things start happening, you want to have that communication with your loan officer. And if you're dealing with different time frames, unfortunately, this is where things get a little bit complicated. Realtors like to talk to people here locally in Hawaii. People are going to pick up the phone like my loan officers here. My recommendation to you is, again, us as a company, we deal with different lenders. We know that we can get you the best deal because we have the ability to see everybody's rates and find out who has the best rate, the best program, and so forth. But for your sake, I would recommend, hey, look, talk to your bank. Find out, hey, I bank with Central Pacific Bank, for example. Hey, let me find out what they can offer me, and then talk to Smart Money and figure out who has the best deal. Because again, you're the one that's going to be making the mortgage payment for the next 30 or so years, and so it's only fair that you get to find out whoever has the best deal, best everything. Of course, super important. Set realistic budget based on what you're pre-approved for. Okay. When you're working with the loan officer is going to do the pre-approval. They're going to find out what's the maximum that you can qualify for based on your budget and based on your income and your credit. They're going to find out. Of course, talk to your realtor about how much can this get me of a home in the areas that you're looking for. But of course, you also have to be realistic about it. Pricing in Hawaii tends to be quite expensive. So, make sure that your expectations are matching, what's available out there. All right. You want to find a credible and capable team. I cannot stress this enough, right? You want to have a lender that has different options. And the reason I say this is because, like what we said at the beginning of our webinar here, not everybody fits in all it's not like a cookie mold, if you will. Not everybody fits in the different bank scenarios. So you want to have somebody who has the ability to pivot quickly. If the loan doesn't work out at this bank, maybe I can make it work on this bank, or maybe I can make it work on this bank, right? So of course you want to have access to first time home buyer programs, right? You want to have access to all, or at least a lot of the lenders that are available out there. And the only way to achieve that is if you work with a mortgage broker. You want to make sure you explore the different options. Again, there are so many different types of loan, and this is not for you to figure out. That's what the loan officer is getting paid to do. So have that conversation with them, finding out what's the best program for your particular situation, for your particular budget. Does it make sense for me to do a lower down payment but then use this money to pay off debt, or does it make more sense for me to do the opposite? And then this is one thing I cannot stress enough, of course, is be honest with your loan officer. Okay. So we are on the same team. We're not working against you. We're working with you because, as I mentioned, we're all trying to get you to the finish line. The lender pays the company once the transaction is finished, right? So it is important for us to know everything. And again, it's not us trying to get into your personal business, but when you're borrowing, $250,000 to $1 million, there's going to be a lot of questions asked. And these questions are not necessarily so that we can, have some dirt on you or something like that, but rather the more we know about the situation, the better off we are. For example, let's say that in this is a scenario that happened. There was a client that failed to tell us that they had some tax liens. Unfortunately, the tax liens did not pop up on the documents whenever we started the transaction. It went through. The underwriter may have missed some of that. We got to the end, and unfortunately, at the end, these tax liens popped up. Well, because of those, we were unable to close the transaction. So the client thought, perhaps if I don't say it, if I don't tell the loan officer, this is not going to come up. Well, it came up at the wrong time, because this is at closing, and this is the worst time to find out that there are issues. So if there's child support that you're paying that perhaps is not showing up anywhere on your pay stubs, any alimony, anything that you think is pertinent to the transaction, you don't need to hide it from us. Make sure that you're telling your loan officer so that they can tailor the loan, including all these little things that can make a huge difference, right? We don't work for the IRS, so anything regarding assets and things like that. It's just to find out whether or not we can get you a better deal. It doesn't necessarily mean that, hey, I have X amount of money and I'm just going to put it on a loan application, right? If you have different accounts, we might be able to say, hey, listen, let's just use this account instead of all these other accounts because this is enough to make the loan work. But we want to know the entirety of it so that we know what we have to work with. Okay. Now, another big thing. So again, that's for the mortgage side. The loan officer that you pick, you want to make sure that they're well versed in first-time home buyer programs. Make sure that they have access to different first-time home buyer programs and also different lenders, because what that does is allows you to shop around on your behalf to get you the better deal. Again, be honest with them. And then another piece of the equation, as we talked about before, is the real estate agent. The real estate agent is somebody who is essential to this transaction. That's the person that's going to have access to all the properties. If I go online right now to Zillow or Google Properties or all the other property searches that I can do, great. I might be able to see some of the properties that are on the market, but guess what? These properties are not updated daily, and a lot of them are not necessarily accurate, right? Realtors have access to the to the MLS, the Master Listing Service or System, rather. And what that is the most up-to-date search engine that has all the properties that go on the market. If I post a property today, right now, and that property fits your criteria, you would get that email within a minute of me posting the property. So you're going to have the most accurate information, but the only way to get there is if you deal with a realtor. Yeah, I always say this, when you're finding a realtor, it's almost like dating. I mean, or not dating them, but you're going to be spending the next 3, I don't know, let's say a week to 6 months or a year searching for properties. Hopefully it doesn't take a year, but if it does, you're going to be working with the same person. You want to make sure that somebody that matches, your personality, your style, somebody that has the same communication methods as you do, because again, this is the person that you're going to be talking to on a daily or weekly or monthly basis, and they're the person that are negotiating for you. So you want to make sure that you're both, that there is that synergy between you guys as well. Same thing with the loan officer, because again, it's a team, right? The loan officer that's getting the loan done for you, the realtor that's getting the negotiation and the price for you, and you guys. So it's like that trifecta where you want to make sure that you're working well together. And so as you're talking to these folks, it's like interviewing somebody. Hey, I talked to this person. They seem to fit my criteria, my style, my personality. I rather go with them. And again, you can choose and pick whoever you want. That's that. And if you don't have a realtor, definitely talk to the loan officer and see if they can recommend somebody that they've worked with before in the past, that they know that they've tried working with the same person and they've had a good success. They could always recommend that. And of course, here it is, teamwork. We were just talking about this, right? So let so share your expectations from the beginning. Meaning, I want to get into this property. Maybe I'm not in a rush to get into the property. So perhaps I don't want to be rushed. Maybe I want to find out on my own which properties are there, and I might take, I don't know, 6 months to find the property. Sure. Make sure you're sharing that information with the loan officer and the realtor so that they can adjust their expectations as well, right? Same thing, right? If I'm shopping around for a condo, let's just say a $200,000 condo, that's the expectation that they have. Meaning, well, I talked to this realtor and he only sends me this, but then I talked to this other realtor and they have access to more because I gave that realtor a higher price point. So when you're dealing with that, you want to make sure that whoever you're talking to, you're going to be telling the exact same story so that, you know, they're giving you the same information. So it's not like one realtor has access to other properties other realtors don't. It depends on what you give them. This is the room count that I want. This is the areas that I want. This is the price point that I want. And if that's different, of course, one realtor might be able to show you different properties because you gave them a higher price point. Again, just set that expectation and be honest with the people that you're talking to from the beginning, so that way there's no misunderstandings, right? And remember that the team, the loan officer, the realtor, anybody involved in the transaction, the main objective is to get you into the home. So they're here to help you. And the best part is that you are in the driver's seat. It's important for you to remember this. The transaction begins and ends with you. We're here to support you in that capacity, but we're not here, we're not the ones that are going to be making that mortgage payment. So it's important for you to understand that, we exist because of you. And so we're here for you. So again, we're not against you. We're with you to make sure that you get into the property that you're trying to do. All right, so here is the last one. Time equals money. So what does that mean? When is it good time to buy real estate? I don't think we have. Do we have Paul on this one?
No, no, Paul. You can go to the next slide.
So the good old question: when is a good time to buy real estate? Now. It is imperative. Here, let me see if this. Oh, there it is. Okay, so it's imperative that you understand that time is money. So what this means is, let's rewind the clock back to 2021 or 2020, when we experienced the lowest interest rates that we've ever seen in our entire history, right? The same payment that you had on say a $900,000 home this year, this year that we just ended, you could qualify for the same payment for a $600,000 home, right? Time is money. If I wait, two things could happen: the rates can go up, and the prices are going to go up. The likelihood of property values coming down in Hawaii to a level where it will make sense, the time wait, is very minimal, right? So we have the saying here that instead of waiting to buy, what you do is you buy and then you wait. I have a scenario that had a client, really great family. They have been shopping around for a home for the longest time. In 2021, their budget was about $900,000 based on that interest rate that was available at that point in time, right? Unfortunately, there were things that didn't work out for them. They were very specific about certain things and unwilling to budge on other areas. 2022 came around and the rates went up, and every month I would have a conversation with a client saying, "Hey, perhaps it's time for you guys to adjust your requirements because the $900,000 pre-approval is now 840,000, and then the next month it's 800,000, and then the next month is 700,000, and every month it kept on going down and down as the rates were keep on going up, and the value remained the same or went up a little bit, maybe not as high as it did back in the 2021 and 2020s, but still went up. And so what they ended up doing was they readjusted their requirements. They talked to the realtor. The realtor found them an excellent property. They wanted a single family, but unfortunately, that was outside of their budget now. So the best next thing that they were able to get a townhome in Eva, and they bought this property. They put in an offer. It was 695, as a matter of fact, because their pre-approval went from 900 to 860, 840, 800, and we were down to the 700. And this is like 6 to 8 months into looking for a property. They got the offer accepted at 695, I believe, right? So we had this conversation instead of waiting to buy, right? Because their thought was, hey, why don't we just go ahead and wait until the rates go down again? And the rates kept on just creeping up and up and up, right? So their purchase power kept on going down and down and down as the rate goes up. So they bought the property for 695. The appraised value for that same property was $720,000. What that means is that I bought a property for 695, but it's worth 720. The whole idea of buying and then wait means I buy something now and then I wait, because if my idea is, hey, I want to wait until the rates go down, well, guess what? Let me buy the property now, right? Wait until the rates go down and then refinance, because guess what happens at that point in time when the rates go down? Well, obviously I'm going to have more equity in the property, but if I had waited until that point to start shopping for a home, guess what's happening? Everyone else was waiting for that. So what's going to happen is, same idea, a bunch of people are going to jump into the pool trying to figure out, hey, I want to buy the same property. So now you're competing against 5, 10 people for the same property, versus nowadays where there is not as many buyers out there. So right now now anytime is great to buy, but right now is a buyer's market, because right now there's a lot of motivated sellers because there's not as many buyers out there. A lot of people are waiting for something to happen. While people wait, guess what? Sellers get desperate. Maybe they can give you some credit. Maybe they can make a better deal, perhaps a lower purchase price. So if you're able to, and if you can qualify for something that makes sense for you and your family, right now would be the best time to buy that property. So that's why it's super imperative to get pre-approved as soon as possible. All right. And let's see real quick. All right. Opinions matter. Okay. So you would have it as you start shopping for a home, everybody has an opinion about real estate, what to do and how to do, right? And suddenly everybody becomes an expert. You want to make sure that you're getting your opinions from an expert in that matter, right? If I was a realtor 12 years ago, I haven't done a transaction at all, and I'm giving you opinions about what's going to happen. I mean, yeah, it is my opinion, but is it an accurate opinion, right? You want to be talking to people that are doing this for a living. The loan officer that's full-time loan officer, the realtor that's a full-time realtor, because their livelihood depends on it. And these are the people that are the sharpest when it comes down to the knowledge, because they do this day in and day out. So you want to make sure that you're getting the opinions from the sources that matter, right? Of course, look online and everything, but at the end of the day, the people that do this for a living, I would say that that's probably the best way to get that, right? Here it is, to buy and wait instead of wait to buy, right? Now, there's another saying too that, a lot of people, of course, the lower the rate, the better. But, unfortunately, we're in a situation where as the economy improves, when the economy improves, once we get to a point where inflation is lower, the rates will follow. Okay. So what we have a saying in the industry is you date the rate, but you marry the home. Same idea. You're getting the home that you like or that you can afford, right? And the rate, yeah, it's temporary because guess what? When the rates get lower, then you could always do a refinance, and that's what we're here for. Anybody that closes with us, we always follow up. We have a 6 month, 12-month follow up, in which we figure out if the market has improved, how can this improvement make a difference to you and your particular situation, and whether or not it makes sense for you to refinance in the future. By refinancing, you might be able to lower your rate, lower your payment, and put you in a far better situation because now you're in the home, you've grown the equity, and now you just have a lower payment. All right. Well, I believe we are coming up on the hour almost. I appreciate all of the questions here, and I'll do my best to try to answer those.
Yep, so I'll read off some of the questions that came in during your presentation while we wrap this thing up. If we didn't get to your question, though, don't worry, we'll go ahead and contact you after the fact. So, first question is from Sherry. She said, I'm self employed but don't show income on my taxes. Am I still able to qualify?
Yes, the answer is yes. And again, I know that the slide says you have to be 2 years and show the income and all this other stuff. The beautiful thing about being a broker is that we have access to different lenders. One of our lenders, actually a couple of our lenders currently have a program that's called a bank statement program. The bank statement program is for those people that are in your exact situation. Essentially, I'm a self-employed person. I don't show enough on my tax returns, but guess what? I do get deposits in my bank statement. Maybe I have a food truck and I get cash, or I do car detailing and I just get paid cash and I just deposit it in the bank. We have specific lenders that can look at 12 or 24 months bank statement and say, okay, well, based on this, we'll give you this much income. So not showing income on your taxes does not necessarily mean that you can't qualify for a loan. Of course, there are certain rules that apply to it, but if you have additional questions about that, or if you'd like to look into what we can do for you, let's go ahead and get Sherry's email, and then we'll establish that line of communication and help you with that as well.
All right. Another question. This one's from John. Do you do DSCR loans?
DSCR, that's called a debt service ratio loan. So what that is let's say that I just get paid cash. I don't file taxes. I don't like Uncle Sam. Why would he get any of my cash? But I still want to buy a property, right? Well, the debt service ratio is nothing more than me buying an investment property, and this is specifically to investment properties, and I'm utilizing the rental income to offset the payment. If the rental income offsets the payment, I don't have to show any income whatsoever. So yes, we do have, yes, John, we do have the DSCR loans available. Again, certain rules apply to it, so we'll establish that line of communication as well.
Great. And then I'm going to just ask one more question before we wrap things up. And this one's coming from Mike. I saw one of your posts on Instagram, and it said there is a way to get an FHA loan with no down payment. Is that true?
Yes. Oh man, these are really good questions. Yes, as a matter of fact, we recently signed up with a lender, and we have the ability to do an FHA loan. As we talked about in one of the slides, the FHA loan requires a 3.5% down payment. Well, this particular lender can help us get a loan for that 3.5% down payment, meaning the FHA will finance, 96.5% of the value of the property, of the purchase price, and the 3.5 can come from a second mortgage. This is an excellent program because essentially it's like getting 100% financing, not going through VA or FHA. Same idea. There are certain restrictions and whatnot, but we can talk about that a little bit later offline. But this is a really, really good program that we just came into with one of our new lenders, and I'm really, really excited about that. So yeah, great question, and absolutely we can help you get pre-qualified for that as well.
All right. So sorry if we didn't get to your questions, but we're just going to wrap things up as we don't want to take up too much of all of your times, but
Yeah.
Will, thank you so much for taking the time today and putting it on this webinar. And I hope you all found it educational. And if you or anyone you know is interested in purchasing a home, please give us a call or send us an email. Our number is 808-447-1850, and we're located in Honolulu in the Pan Am building. So you
Yes,
can always stop by our office too if you want to come visit, or send us an email. You can send it to admin@smartmoneyhawaii.com. Everything all spelled out. And thanks again for joining us. So,
absolutely.
any
Thank you.
final words, Will?
Yes, well, first of all, congratulations, because this is the first step towards ownership. And I can't stress this enough. Maybe I drink the Kool-Aid on a daily basis for the past 18 years, but I really believe in this because I myself have gone through it. And I'm much like you, I was in your side at one point or another, just starting with the one property. Do not get discouraged. It's worth your time and it's worth your effort. And this is the first step towards that home ownership. So congratulations. Continue on your journey. If there's anything that we can do for you guys, please let us know. Our point of contact is there as well, and we'll be more than glad to help you guys out. Thank you for your time. I appreciate you guys spending the time with us today. And that is pretty much it. Great picture, by the way. Look at me. I look fantastic.
All right, thanks, Will. Take care, everyone. We'll see you
Hi,
next
guys.
time.
Aloha.